Time for the markets with Zac Ashmore. Zac, yet another week of ups and downs, right?
Thanks, Mike. And that's right. Markets looking a bit more normal. Row crops still high, lumber still falling, and livestock rising just a touch. Let's take a look. Last week's biggest loss, other than lumber, down about $144. Wheat down about $11. We'll explain more in a bit. Last week's biggest gain, lean hogs up about 5 cents. As we've talked about, China buying up pork, and with grain prices falling, that gives room for livestock to rise. So why did wheat prices fall? Well, weather and supply is the biggest reason. Rain falling on the winter wheat harvest, that could mean disease. However, harvest looking good and large this year. That means more wheat on the market than initially thought, so prices responded. Analyst Don Roose, tell us more.
We're getting close to harvest. We're harvesting in North Texas right now, but as we get too much rain, we get too much feed wheat, and so it's going to be a little bit of a buffer. I think we were looking to feed a lot of wheat anyway, but it looks like the crop is going to be huge regardless of the disease. 80 to 100 million bushels more than what we thought, so pretty big deal. What happens with the disease, we'll find out going forward. From the wheat standpoint, we're going into harvest. To be overly friendly going into harvest is, always a question mark. The crop has to be getting smaller, not bigger, and it's big. But the wheat this time is getting support from the corn market as we really are trying to feed more wheat. So that's the supportive factor. So goes the corn, so goes the wheat. I don't think you'll keep that the differential on the spread too different as we go forward.
The hog market following closely with cattle, mostly due to the same issues affecting all livestock, feed prices. However, there's more to it. Several times in the past few months, cattle fell while hogs held on. Several reasons for that. China, the biggest one. We've talked about it before. Pork, their #1 protein. They love their pork. And although African swine fever outbreak of 2020 appears over, they're still stockpiling. Another reason, Americans also buying pork. Don Roose gives us those details.
Well, the hog market made new contract highs again, and the real issue with the hogs is the disease issue that we had. So the supplies are just tighter. But and then China continues to be just a huge buyer of hogs. The second largest buyer, just behind Mexico. So I think the problem is China's hogs are making new lows. Their weights are heavy. At what point in time do we switch and they slow down on their imports and our supplies grow? That's probably going to come in the fourth quarter. This demand that we've had has just been record large. I mean, very strong. It's due to the stimulus. It's due to, the money that the consumer has right now. So we've had a lot of distortions in the marketplace, a lot of them just due to some of the government actions. So we're forced to unwind some of those as we go forward.
Soybeans, another row crop, shifting dramatically the past several months. Prices still higher than usual, and last week rose 4.15 cents. Now what is a producer to do with all this volatility? Lots of details to sift through on or when not to make a sale. But once again, Don Roose has some advice for the farmer trying to wrap their head around it all.
We have a big competitor, South America, and South America basically is providing all the soybeans to China at the present time, but the crush in China is actually a negative right now. So the real question mark, are they going to take all the beans that they've actually purchased? They could be 120 million bushels less than what they've say they're going to take. So roll them into new crop. From our standpoint, the basis level has set back on soybeans. That really actually set the top in. But, that's going to be an issue as we go forward with China. Well, I think the first thing you should do is look at your margin. What kind of margin do you need to pay your bills? I think that's the first thing. How big of a gambler do you want to be? But we've got insurance underneath the market, Lofty, but you can also buy options underneath the market that up your insurance rate, leave the upside open if you want to. So there's some alternatives that you have from a producer standpoint. The good news is most of these things, well, all these things that you do are profitable. You're working with areas that are profitable for the producer. So incremental sales on rallies can never go wrong. I think the real question I think you have to ask yourself if you're a producer, do you think we're in a new era of price discovery? Or do you think that we're going to go back to the old price discovery again? I would say it's going to be eventually more of the same, when the party ends. We always say you take the stairs up, the elevator down, and look how fast the market dropped from 638 down in a month.
And that's it for a deeper look into the markets. Really hard to predict what's coming next. Let's be honest, 2020, a very strange year, and 21 looks the same. A lot of that has to do with corrections post-COVID, along with weather, international issues, supplies, and so on. All of that's to say, we're not in a major crash cycle or anything like that. The markets are still stable. Well, as stable as they can be, all things considered.